I think this year is going to be a transitional year for the company under Greg Abel. And I think some of the steps he's recently taken have sort of shown that. With regard to the cash pile, some of that cash is being held to support insurance liabilities. So I don't think investors should think that that cash is all going to be deployed into acquisitions or what have you. I know given Warren's investment style and value-oriented approach, the sense that I had was he was sort of frustrated with valuations. He was having a hard time finding good uses for that cash. My sense is as we head into 2026, there may be some pressure on Greg Abel to potentially pay a cash dividend with that, or possibly put forth a more structured share buyback program if they're not going to deploy it into acquisitions.
What could they buy with that much cash? Is there anything that you could think of if you were in charge that you would try and pick up?
I don't think my compliance folks would like me to speculate on who they might buy. But I think if you look at the Berkshire operating model and you look at the framework, the investment portfolio is sort of barbelled between financial services and technology. And those are names that they like to own as an equity investor, not necessarily as an operator. So I think if we look at Greg Abel's background in energy and industrials, my sense is that he may tilt in favor of those businesses, which makes sense given what's going on with some of the industrial and energy build out to support AI. And then I think the other area that probably makes sense to look at is the insurance space. It's a significant business segment for Berkshire, and insurance pricing is softening. And when that happens, typically you see an increase in M&A activity. They have in the past added to their stable of companies through acquisitions. I wouldn't be surprised if they do that going forward.
As a non-Warren Buffett acolyte, my first question would be, he can't find any investments. That's clear. Why does a company not return that cash to shareholders via that dividends and/or buybacks?
That's a good question. And my sense is that Warren Buffett was given a certain level of grace and leeway that Greg may not be given. And there may be a cohort of investors who do agitate for a return of some of that capital. I would not be surprised to see that.
Hey, you're getting some blowback in the live chat now, Paul.
I know.
And you're a dividend guy, I get it. But these investors that are watching us on YouTube say they better not create a dividend, completely wipes out a segment of investors. We do not hold Berkshire looking for a dividend. I invest in Berkshire because they're better with money than I am. And they make some good points here. So, Cathy, I guess a buyback makes more sense if you're going to try and return cash, right? If you think Berkshire shares are undervalued.
Well, but that's the interesting thing is that they haven't bought back any shares in over a year. They didn't buy back any shares this year. And so not buying back shares, you have a situation where I believe the Warren Buffett premium is being extracted from the stock. There is not necessarily a significant acquisition plan out there. And then the other pressure is a lot of that cash is invested in Treasury securities. And if Treasury yields continue their current trend, we would likely see investment income coming under some pressure. So, there may be, maybe not the people on the Bloomberg chat room, but there may be some large pension funds who are not on the Bloomberg chat room who may have a different feeling given, where the company is, given the position of the company, and given its growth prospects, which have not been particularly stellar, particularly on the top line.